I'm gonna go ahead and record this. All right, so if you guys have any questions, go ahead and drop them into the chat, and we will go ahead and get started with this first-time home buyers webinar. All right, so are you ready to buy? I think that's the biggest question that people are asking is, am I ready? A lot of people don't know when they're ready, and I don't want you guys to feel bad about that. I grew up building homes my whole life. My parents were in construction, growing up, and I can tell you the whole process of building a home, and I could never have told you the process of buying and financing a home, right? So you're not alone. Most people do not know what this process is like. They don't teach it to us in school, right? It's kind of like if you're not a finance major in college, you probably have no idea, what those steps are to financing something like a home and obtaining a mortgage. So in this agenda, in this webinar, we're going to go over some of these big checkpoints, these that you should be kind of assessing yourself in, and we're going to talk about employment history. We're going to be talking about savings, and we're going to be talking about credit score. Those are the three kind of check boxes that, okay, I'm good there, I'm good there, I'm good there. Well, then maybe I am ready to buy my first home or at least inquire. Then we'll talk a little bit about what time frames look like, and then we'll also talk about what the process looks like in terms of making your first offer or getting pre-approved, making an offer, and then getting the keys to your home, right? So we'll talk about that process and what to expect. And then if you're a first-time home buyer, uh, you might hear, depending on who you talk to, which direction you should go in. But we believe that the FHA loan program is suited best for first-time home buyers. That's what it's designed for. It's designed for first-time home buyers. So that should be your number one loan option if you're trying to get a home. So remember that term, FHA loans. We'll talk about that in depth in a little while, and then we'll talk about the first steps to take in terms of application, and then what documents to prepare in order to start the process that you'll need to prepare to start the process. Okay, so let's go ahead and get into it. All right, employment history. Stability matters. A stable employment history is crucial in the home buying process as it demonstrates financial reliability to lenders. Typically, lenders prefer applicants with at least 2 years of consistent employment in the same field, right? It may not be in that same position, but in the same field, as this indicates job stability to the lenders and their ability to make timely mortgage payments. So, job stability, that can mean a variety of things to different people depending on what job you're in. Now, again, we're looking for 2 years of consistent job field history. A lot of people think that, because um, they may have worked at one company and they went to another, that resets their timeline. When really, as long as it's in the same field, you're good to go. Some people also worry about job gaps. Let's say there was a 2 or 3 month period between jobs. Does that affect your home buying eligibility? Well, I mean, most of the time, as long as you're in the same field with a little explanation letter, maybe had a family emergency, maybe you had a baby, maybe you had to relocate, or for whatever reasons there was a gap. If we can explain that gap, then it shouldn't be that big of an issue. Employment history also we can work around certain things like school, right? We can use your previous schooling as time, right? Because what we're trying to prove here is time, that you're stable in that field of employment. And sometimes we can include college experience. Sometimes we can even include maybe projected income, right? Because really we want to see that that income is going to be stable and you're able to make those payments. And sometimes we can use a contract, right, for your future employment. Let's say you went to school for a year, now you got a year contract. Well, hey, that's 2 years of history, and we might be able to work those things in together to get you eligible to check that box so you're ready to go to the next step. Because that really is the first box that you need to check in terms of home ownership. Now, it can be like you started off as a retail employee, and then maybe you're a manager now, and maybe now you're a training manager or something. You've moved up in the same field. The title has changed, but your field has stayed the same. Well, that works, so that's a really good thing. So job history, stability, is very important, and that's the first checkbox that you want to kind of assess yourself in and be like, okay, am I ready? Okay, well, have I been in my field long enough, right? Okay, so next, let's talk about savings. Prepare for down payment and closing costs. So these are the two things that are the big pillars of your transaction of purchasing a home is, how much am I going to have to save for, right? And that's down payment and closing costs. So we're going to go into what these are in depth. And this is kind of where I'm going to introduce to you the FHA loan program. FHA stands for Federal Housing Administration, right? That's what it stands for. And they offer a 3.5% down payment option. So FHA loans are government-backed mortgages designed to help first-time home buyers or those with less than perfect credit, right? This makes home ownership more accessible, allowing buyers to invest in a home without significant upfront cost. Okay, so what do we have to save for? Down payment and closing cost, right? Let's talk about down payment first. Okay, so in a normal conventional loan, there might be a 5%, 10% down payment required for the loan. FHA, all it does is shrink that down to 3.5% to make it more affordable for the buyer. Now, a big misconception about FHA loan is that it's for low economic or poor individuals, and that's a huge misconception. I've had a client recently who makes over $80,000 a year and was going to buy their first home. And I told them, oh, hey, we got to go FHA. It's going to keep more money in your pocket in terms of down payment. He goes, FHA, is that who's that for? I make good money. I don't need no, it's like no, you can qualify for an FHA loan. Doesn't matter if you make $150,000 a year or $30,000 a year. As long as you're a first-time home buyer, this should be the program that you're looking at. And if you work with us, this is most likely the one that we're going to go ahead and walk you down that journey of FHA loan because it's going to keep more money in your pocket. And for credit, less than perfect credit scores, we're going to talk about credit in a little bit, in a few slides from now, but they have lenient credit guidelines. So for some loans, you need over a 600, 620 credit score. Well, with FHA loan guidelines, we can go down into the 500s to the 580s, something like that, just depending on every situation is different. But with other loans, they have more stricter credit guidelines. FHA loans allow that flexibility, right? So this is the program that most first-time home buyers will receive when they're looking for a new home. So we talked about down payment. Let's talk about closing costs. All right. So closing costs, explain. What are closing costs? I mean, because even for myself, like when I was first growing up, I thought that, oh, down payment, that's all you ever hear. And you don't ever really hear of closing costs, which is the other side of what's going to come out of your pocket potentially during a home transaction when you're looking to buy a home. What are closing costs? Those are fees and expenses incurred when finalizing a real estate transaction. Fees like loan origination fees. Like myself, I'm a loan originator. Our fee comes in at the closing table, meaning that we don't charge you a dime for your application, for us working and putting our hours into assessing your situation and preparing your loan and all that. We will do all that for you, and then when we get paid once the deal is done, right? Appraisal fees are part of closing costs too. Appraisal fees can come out of your own pocket. So let's say you are approved for a home and you want to put an offer down on this home. Well, there's going to be an appraisal done to make sure that it's worth the amount that, we're saying on the loan. And all that gets done, and it's about a $700 or $800, maybe $600 to $900 appraisal fee. Usually that comes out of the borrower, and the borrower's pocket, and that's a part of closing costs. So appraisal fees, title fees, certain taxes, and usually that can sum up to 2 to 5% of a purchase price. Now, one of the biggest pluses of going FHA, like we're talking about, and FHA is just a program. I know you're probably a little bit lost, and I'm trying to make this as simple as possible. And I can explain it to you guys more in detail once we kind of communicate a little bit more. But FHA, that program allows for the selling party, meaning if you're going to buy a home from someone, that person who's selling you the home can also contribute some money to help make the deal close and to push it through, right? So the selling party of an FHA loan can contribute up to 6% of closing costs. Major advantage for first-time buyers, enabling sooner purchases. Some other programs only allow 4 or 3%. FHA allows 6%, which I'm telling you is basically all of it. So there is a world where you can walk into a transaction to buy a home, and all you really do have to pay is down payment, maybe the appraisal, and maybe other couple minute things, and the rest of the closing costs gets covered by the seller. Or if you're buying a new home, the builder, right? Someone built you a new home, they can contribute some of their back end to cover the closing costs for you up to 6%. And like we said over here, usually it's 2 to 5%. That's how much it is. And so basically, the seller can cover all of it, which really is what makes home ownership more obtainable for an individual. Because if someone needs to save for a down payment and closing costs, that's a lot of saving time. You're gonna have to save for a while because they're real similar in amounts. And so to have double is a little bit much. So that's why this program allows for 6%. And that covers this side, you cover this side, and you're able to close the deal. So very important closing costs, 6% when you're negotiating on a home. This kind of comes in later to play, but a loan originator like myself would talk to a realtor, the real estate agent that you're working with, letting them know, hey, you guys are looking to get the full 6% so you can cover that part of the deal. Okay, let's go back up. So how much money do you need to save? Right? That might be one of your big questions, So that's understanding your financial requirement. So we talked about the down payment. It varies by loan type, but FHA loans require a minimum of 3.5%. So let's just say you're looking at a $200,000 home. 3.5%, that's $7,000 for a $200,000 home of down payment that you would need. Now, the other side of the transaction that costs money is the closing cost. Appraisal, that probably is going to come out of your own pocket. Escrow is just some money that you put down to use for certain things, and it's always good to have $1,000 or $2,000 in escrow. And then any third-party expenses. So let's say you do want to buy a home, right? You have the down payment, your credit score is good, hey Tiffany, just saw your question, I'll answer it right now. Your employment history is good, but you're gonna buy a home. Third-party inspections, guys, are like your termite inspection, your roof inspection, your foundation. You want to get all that stuff kind of inspected before you commit to a home, and those inspections can come out of your pocket. So just depending on what those are, that's something that you need to budget for. All right, so let me go ahead and take this question really quick. Is a down payment mandatory if you are approved for the full amount? Yes, mandatory. Down payment is mandatory. Usually there's some type of down payment always required for a purchase. Okay, no problem there. If you have any more questions, go ahead and feel free to ask. So, um, most programs require a down payment. FHA loan is 3.5%. Conventional can sometimes be 5, 10. If it's in a second home, you're looking at more like 10 or 20. If it's an investment property, you're looking more at 15 to 25% down payment. But for a first-time home buyer FHA loan, you're looking at 3.5% down of whatever the cost is of the home. Correct. All right, so being prepared financially ensures a smoother buying experience. And really that means is that you want to be able to have enough money for the transaction, and as you go through it, by the end, you have a little bit left over versus not having enough and we're trying to figure out ways to cover certain costs to make the deal go through, right? So being prepared and all that is very important. Okay, let's see. And if you have any specific scenarios, we can always get together and go through those with you as well. Okay, so now credit scores, knowing your number. A credit score is a numerical representation of your credit worthiness, ranging from 300 to 850. I've never met anyone with a 300 credit score, and it's very hard to find people with 800 credit scores. And if you do have an 800 credit scores, man, good for you. You've been very responsible and done a lot of work to get that score. This score influences your ability to secure a mortgage as lenders use it to assess the risk of lending to you and determine the interest rate you may qualify for. So the impact of your credit score. A lot of people think, oh, I can't get a home. I have bad credit. So what is the real impact of credit on your mortgage? Well, first off, there's always guidelines for minimum scores, right? So FHA, like we talked about, allows for like a 580 credit score. So you can get a little bit low there. Anything kind of lower, the 560s, 580s, in there, and then we need to do some work on getting that thing a little bit higher. But if you're in that score, that 580 range, whatever, it doesn't rule you out. It might just take some other things along the way to kind of push the loan through. But higher credit scores give you better loan terms, lower interest rates, and a higher chance of mortgage approval. So lower credit scores are on the flip side of that. They might limit your options on what type of loans we are able to present to you. It might increase your cost of your mortgage payment with higher interest rates. So a higher interest rate equals a higher monthly payment, right? And more interest that you're paying kind of over the lifespan of the loan. So understanding your credit score is key to navigating the home loan process effectively, but it is not the end all be all, right? The better your score, the better interest rate you're going to get, which is going to lower your payments, right? So that's basically it. I mean, it really doesn't rule you out unless it's too low. And in that case, we've had plenty of clients that are in the low 500s where we work with them, we get their credit report, we see what they need to do, okay, and then we work on that over the next 4 or 5 months. We get their scores where they need to be. Now we're ready to move forward, right? So it's not the end all be all, it's just a big kind of a marker in the process. So the next thing we're going to talk about here is your time frame. Time frame is huge. Time frame is different for everybody. You're here because there's probably a dissatisfaction with where you're at now. Maybe you need something bigger. Maybe you don't want to live in an apartment complex with so many neighbors, or maybe you're relocating. Usually there's just something there that you need to address. So making a plan to have all these kind of checks in place so we can get to the end and it all goes smoothly is huge. So establishing a clear time frame is crucial in the home buying process as it helps set realistic expectations and guides your actions. For instance, okay, you've talked to us, we've told you what your price range is for homes and how much home you can afford. Okay, times 3.5%. Do we have this amount of savings? Yes, great. No, no worries. How long do we need a plan every month to save to get to that point where we have what we need, right? So that's the journey of home ownership. It's not like you're buying a car, right? So it's not like you're walking onto a car lot and you have a couple grand in your pocket and you're going to walk out with a car. No, that's not usually how a home, buying process. It's a long process. And the more strategic we are, the more smoother it is and the more we're likely to get to the goal. So knowing when you want to be in your new home allows for better planning and informed decision making throughout the journey. Okay, so when you do get approved, I think it's important for all of us to know kind of what to expect. So let's say you have your job history, check. You have your savings and you're going to be okay, check. Okay, you know kind of what to expect there. Okay, your credits, okay, check. So what does the process actually look like when you get pre-approved? And we're going to talk about what that means here in a second. Usually it starts with a pre-approval. That can take us up to maybe 24 to 48 hours, depending on who you're working with. It can take a week or so. Then you want to search for homes, and that can take as long as it may take, depending on what you're looking for that fit your criteria. And then you start negotiating offers, right? And an offer can get negotiated within a few days or a week, just depending on the situation. And then that's once your offer gets accepted, that is when you want to go ahead and get your home inspections. That's when we do the appraisals, and that's where we see that everything's going to be okay with the home that you're trying to finance, and that it meets all of the criteria that we need on our end. And that will actually take a week or two. Appraisals can take a week or so, just depending on how long that goes. Okay, so hey Tiffany, saw your question right here. How long is the pre-approval good for? Usually, when we issue you a pre-approval, it's good for 60 to 90 days. Usually, after that point, we'll have to do another soft pull credit check just to make sure that nothing has changed on that end. Make sure that the borrower hasn't gone and financed a new couch or a new washer, dryer, or whatever. In the meantime, and that affects obviously the credit. That'll affect the debt to income ratio. That's something that we talk about when we're going through the process. That tells us how much home you can afford. And if you finance during that time, then that affects everything. That changes everything. So usually they're good though for 60 or 90 days. And if nothing has changed in your situation, then we just issue you another one. It can be super fast and they'll be good for another 60 or 90 days. and we'll just kind of keep doing that until you find the home that you're looking for. Okay. So no hard credit pull. Great question. We do not do a hard pull until you're ready to basically lock your loan, which means that your offer has been accepted, and we're ready to move forward with the transaction. Then we'll lock your loan and we'll do a hard credit pull, which will give us the full report, and then we'll move on from there. So during the whole pre-approval process, we've done a soft pull. So if you go to our link and you start your application online and you give us the consent and we run the credit, all that is soft pull, which means no credit inquiry on you, and it doesn't affect your credit score. Yeah, so great. It's a soft pull, and we also run you through a no solicitation program where your information gets protected, right, and doesn't get solicited by all these different people. Okay, so home inspection a few weeks, and then closing process can take 30 days or so. We've done some in less, we've done some in more than 30 days, just depending how good we are at getting what we need documentation wise, and then turning it in and then it getting processed and all that. So usually it can take somewhere between 15 to 30 days to close, right? That means that you've already made an offer, you've already gotten your inspections, everything's good there, and we have all the documents needed. We've processed them all, and everything's good to go. And closing usually it's really quick. You know, we've done some in rapid time sometimes, but usually the documents are all there, everything's good, everything checks out, and we're ready to go. I've actually had a deal where we get to the home inspection point of this process, and the foundation, something's wrong with the foundation, or something's wrong with the roof, or whatever, and they end up pulling their offer, and so then we go back a step, right? And then the search continues for that borrower. You know, I've been there, done that. Overall, once you're ready and you're finding the home you like, it'll only take a few weeks after that to get you the keys and get you into your home. Okay, so how do you take your first step? So if you feel prepared and you've answered yes to a lot of these questions regarding your employment history, your savings is you're on it, your credit score is okay, and the time frame, you're ready to kind of explore that. It's time to take the next step, right? So you can set up a free consultation with us. You can send us an email. You can send us a text. Our applications are free. They're no obligation, so we'll find out where you stand once we get your application in 24 to 48 hours. And we've done it on the same day as well. And then we're able to get back to you. Okay, so what documents should you prepare for your application? So first thing we want to talk about is pre-qualification versus pre-approval. A lot of customers get that confused as well. Pre-qualified is, hey, we've talked, you've told me, I've numbered it all down. This is what I estimate for you. That's a pre-qualification. No documents obtained from you. Now, to get a pre-approval where you're actually greenlit to go and start shopping, talking to your real estate agent, telling them, hey, this is what I'm pre-approved for, and then your agent and I start talking, all that gets done once we've obtained documents from you. And we've verified your income, we've verified we got your copies of your IDs, your social security, your W-2s, your bank statements, and then any other kind of documentation that will be required, I'll ask for you after the fact. But usually I just got to verify who you are, right, with your IDs. Got to verify your bank statements that you're getting the deposits from your income. Got to verify your income, verify your W-2s, and that's usually when we can go ahead and get you a letter and you're free to go and start shopping. Some people might get it to you sooner, but usually that's very irresponsible, right, from a lender, right? You don't want to send people out shopping for something that they won't be able to qualify for. So preparing documents is a good thing to start doing if you're approaching the milestones of, okay, I'm going to apply, I'm going to start wanting to shop, I'm going to start doing those things. All right, let me start getting these documents ready. All right. So thank you guys for showing up. Thank you for attending this webinar. If you have any additional questions, feel free to drop them in the chat or send us an email. I see I got like 5 more minutes on this timer for this Zoom, and then it's going to shut me out. We're very happy to help. Again, we'll be sending you an email with some PDFs to help you get started, right? And it gives you a bunch of information to kind of get ready for the journey. We'll also send you a link via email that has where you can book a free consultation with us if you want to select your time, if you want to do it that way. We'll also send you a link with our Facebook so you can stay connected with us and some review links as well. So we truly appreciate the time that you've given us today. Tiffany, thank you. Andrew, thank you. Whenever you guys are ready, we're here for you all. And just also want to let you know that, as loan originators, we want to help you guys get into your first home, but then we don't just disappear, right? So, like later down the road, if there's ever a situation that comes up where you need to sell and move, or it's time to refinance, we'll let you know, hey, you got it at this rate. Rates are better. It's time for you to refinance. So you can have a lower monthly payment. Or let's say that, you want to tap into your home equity. We can help you with that for certain, situations that come up, or if it's time to relocate, upsize, downsize, or you want to start looking into invest down the road. We're always here for you guys, and you can consider having a mortgage pro in your pocket when you work with us. All right. So again, we're the Trejo Mortgage team. My wife Alma, she's doing kid stuff today, so I'm taking over this webinar. I want to thank you all for hanging in here with me. Again, look out for some emails from us, and feel free to shoot us a text or give us a call. You can reach us at my number is the 210 number 210-617-0524. If there's nothing else here, the webinar is good. That's all I got for y'all, and I'll be doing more webinars. So wherever you found this on LinkedIn or on Facebook or Eventbrite, we appreciate you, and you can always find more of what we got going on there in terms of mortgages. Okay, so thank you all. Have a good night as well. Thank you. All right, Andrew, any questions? You're good to go. If not, you're good to go. I'm gonna go ahead and end this webinar. Have a good day, sir.